Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Let's dive into the latest news and the developments from around the world. Let's start with Eurocommerce, an organization that supports customs reform proposals. However, they have expressed concerns about certain operational issues and the lack of involvement of EU trade. Despite their support, Eurocommerce emphasizes the need for realistic targets, modern technology, and a focus on competitiveness. Moving on to New Zealand, the retail sector is facing some challenges. In fact, retail activity has declined for the second consecutive quarter. This 4.1% decrease in the total volume of actual retail sales is a concerning trend for the country's economy. Shifting our focuses to Hong Kong, we have some inflation figures to discuss. In April 2023, overall consumer prices in Hong Kong rose by 2.1% compared to the same month the previous year. This increase was mainly driven by changes in rates concession and has implications for the cost of living in the city. Let's turn our attention to the European Union and the employment of ICT specialists. Interestingly, the highest proportions of women employed in this field were observed in Bulgaria, Romania, and Estonia. However, there has been a marginal decline in the share of women working as ICT specialists in 2022, breaking the upward trend observed in previous years. Moving on to Turkey, we have some great news to share. Turkey has secured an impressive third place ranking globally in the Blue Flag 2023 awards. This prestigious recognition is awarded to beaches and marinas that meet strict environmental standards, promoting sustainable tourism in the country. In the midst of the ongoing global energy crisis, there is a significant shift happening in the investment landscape. Clean energy investments are now surpassing spending on fossil fuels, according to a report by the International Energy Agency. $8 trillion investment in global energy in 2023, over $1.7 trillion is expected to be directed towards clean technologies such as renewables, electric vehicles, and nuclear power. This surge in clean energy investments highlights the growing concerns over the affordability and energy security. And turning our attention to Asia, the region has experienced a significant increase in borrowing, which raises concerns over rising interest rates and financial stability. Governments, companies, consumers, and financial firms in Asia have accumulated higher levels of debt compared to global financial crisis levels, especially in industries that have leveraged during low interest rate periods. Let's shift our focus to Turkey again and explore the latest confidence index update. While the services sector has seen a decrease in confidence, the retail, trade, and construction sectors have shown an increase. These changes in the confidence index can provide insights into the overall economic sentiment and the performance of different sectors in Turkey. Speaking of Turkey's economy performance, the GDP in the first quarter of 2023 saw a positive growth of 4% compared to the same quarter of the previous year. This indicates a steady economic expansion and reflects the country's efforts in maintaining a robust GDP growth rate. Let's dive into a topic of significant importance: carbon pricing and its economic implications. The European Union has been exploring carbon pricing measures to reduce greenhouse gas emissions and achieve climate goals. Various macroeconomic models suggest that moderate reductions in consumption, investment, and GDP might occur in the euro area due to increased carbon prices. Shifting our focuses to Italy, the Business Confidence Climate Index experienced a decline from 110.4 to 108.7 in May 2023. This decrease reflects a shift in the sentiment among businesses in Italy and can have implications for investment and economic growth. Let's take a closer look at Brazil's construction industry. Over the past decade, the concentration within the industry has decreased significantly, leading to positive outcomes such as increased employment and greater participation from the private sector. This shift in concentration can foster a more competitive and dynamic construction industry in Brazil, which is beneficial for the overall economy. We have an update on the G20 economies. In the first quarter of 2023, G20 merchandise exports experienced a rebound in value, driven by Chinese economic recovery. However, the services trade within the G20 nations showed signs of pickup, reflecting the complex and varied nature of global trade dynamics. And also we are going to Netherlands. In the Netherlands, consumer confidence remains low as pessimism about the economic climate persists, despite a slight increase in consumer confidence from minus 37 in April to minus 38 in May. Consumers are still negative, particularly about the economic outlook. However, there is a slight improvement in consumers' willingness to buy. Are you considering investment opportunities in Asia? Well, here are 5 countries with investor-friendly tax systems. While not classified as tax havens, these countries have implemented regulations and infrastructure to support businesses. Firstly, Hong Kong offers a business-friendly tax regime with no capital gains, estate, or sales tax. The Philippines operates a territorial tax system exempting capital gains from foreign investments. Malaysia also has a territorial taxation system and imposes no wealth, gift, or inheritance tax. And Singapore adopts a territorial tax system, avoiding foreign exchange controls and inheritance tax. Lastly, Thailand operates a territorial tax system with low inheritance, property, and gift taxes. And sub-Saharan African currencies are facing significant depreciation against the US dollar, leading to inflationary pressures and challenging policy decisions. Since January 2022, the region has experienced an average depreciation of around 8%. Factors such as lower risk appetite and the US interest rate hikes have contributed to the currency depreciation. Weaker currencies result in increased import costs and public debt and impacting inflation and economic stability. Central banks have attempted interventions, but limited reserves pose challenges. Exchange rate adjustments, monetary tightening, fiscal consolidation, and structural reforms are crucial for stability in African economies. We are going to US. In the United States, the economy grew by 1.3% in the first quarter. The growth was primarily driven by robust consumer spending and increased government expenditure, reflecting positive economic activity. Turning our attention to Turkey again, the Turkish Central Bank has decided to keep its policy rate unchanged at 8.5%. This decision comes amidst global economic concerns and the ongoing earthquake recovery efforts. The central bank prioritizes financial stability and the price stability in its monetary policy approach. In Austria, the manufacturing sector faced further contraction in May. The Unicredit Bank Austria Manufacturing Purchasing Managers Index, the PMI, indicates a deepening contraction with declining output and demand. New orders have been falling for 13 consecutive months, influenced by rising interest rates and higher customer stocks. The sector also experienced a significant decrease in employment levels, along with the declining purchasing activity and stocks. Moving to Germany, its employment numbers show modest growth in April, with approximately 45.7 million people employed. The unemployment rate remained stable at 3.2%. Moving to North Macedonia, industrial production in April 2023 indicated a decline in manufacturing and increase in electricity supply. The Industrial Production Volume Index stood at 98.3 compared to the April 2022, with a notable decrease of 11.4% in the mining and quarrying sector. Luxembourg's working time trends align closely with other European countries. In 2022, the average working hours in Luxembourg were 1,483 hours per year, similar to the Eurozone average. Over the past decade, working hours have declined due to various factors such as the financial crisis in 2009 and the COVID-19 pandemic in 2020. Although there are some limitations in data comparability, Luxembourg's working hours decreased by 7.8% from 1995 to 2022 and by 1.6% in the last 5 years. Let's go to Serbia and its external trade. Its external trade in the first 4 months of 2023 showed a slight decrease in overall trade volume, with increased exports and decreased imports compared to the same period last year. The euro area is facing tighter financial conditions and vulnerabilities in the real estate and banking sectors, according to the European Central Bank's Financial Stability Review. The recent banking stress and tightening financial conditions have raised concerns about the stability of the euro area's financial system. Uncertain economic growth, persistent inflation, and higher funding costs pose challenges for businesses, households, and also governments. The real estate market is undergoing a correction, with residential prices cooling down and commercial markets experiencing downturns. Financial markets and investment funds remain vulnerable to potential asset price adjustments. To strengthen the financial system resilience, it is essential to address vulnerabilities in the non-bank sector and complete the banking union. Let's shifting to Thailand. It has been experiencing a gradual economic recovery from the COVID-19 pandemic. The country's real GDP growth increased from 1.5% in 2021 to 2.6% in 2022. The recovery has been driven by a rising international tourism arrivals and a strong upturn in manufacturing output. Private consumption and investment have shown signs of improvement, and the reopening of international borders has provided a boost to the tourism sector. The S&P Global Thailand Manufacturing PMI indicates robust business conditions. However, the aging population poses long-term challenges. Thailand's economy is projected to grow steadily with the aim of becoming a $1 trillion economy by 2036. We are moving Latvia, finally. Latvia's GDP has risen by 0.8% in the first quarter, and compared to the previous year. The growth has been driven by expansion in the construction and information sectors. This positive development indicates some economic progress in the country. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.